Hello ladies and gentlemen, thank you for tuning in to Ascending Abundance YouTube channel. My name is Pavel and I am a CFA and a CPA working on this channel to understand how to invest money, make more money with the capital we got, exploring strategies in real estate, stocks, crypto, business, anything that goes to increase our returns and the well-being. I'm not a financial advisor, please do your own research. These are just my thoughts and a little bit of education on what could be done with our money to make more money. And today I'm looking at the question that was top of my mind, where to buy rental properties in 2023 and 2024. Now that interest rates have gone up, the people who got pressured probably had to sell. Some of them are still holding out. The market is kind of shaky. The mortgage rates are high. People need to refinance, and more people find themselves in the upside down situation, negative cash flow. Maybe the equity in their houses no longer brings them the returns that they've been hoping for. So I am contemplating whether or not to pull a trigger. Maybe yes, maybe no. But how do we analyze and find the best deals? I just Googled where to buy rental properties in 2023. And of course, you got Ontario, you got 21 best cities to invest, Las Vegas, top places to invest in Canada, blah, 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 blah. There's a ton of people who want to sell you Caribbean, they want to sell you Windsor, Ontario, and Halifax, Nova Scotia, God knows what. So what is the data showing us? I wanted to go kind of methodically. So first of all, let's go with the places that have the highest population growth. So I looked up Census United States. I'm looking at US. There are probably other places worldwide, but I'm looking at United States specifically. So what is the United States census telling me? As of 2022, if we can click here, you get the tables, we will get this data. So this data. Population 2020, population 2022. So if I sort this by the gross, what do I get? I would get something like this. Just looking at this is my entire table, so please don't pay attention to the rest of it. You get a ton of places where 2022 over 2020 had actually negative growth, and they are of no interest to me. I'm looking at places that have a population influx so that we could get more people in there, and therefore real estate is likely to grow and rentals are going to be plentiful. So I've cut down anybody or any city that is kind of below 1% growth, and then kept anybody above. As you can see in this column, everybody's about 2% growth over the last 2 years. Okay, so that kind of simplifies it down. Maybe I can show it here. So do a formula, 2022 divided by 2000 minus 1, do the percentage, and copy the formula, and then just do the data, sort. Anyway, sorting does not work that easily. So basically sort it and you get the response, and then just kind of filter out. The next thing I want to know, if this population is growing, what's the unemployment rate? So unemployment rate by metropolitan area is available from this site. I looked at here. So this is US Bureau of Labor Statistics. I'm going with very open public data. I don't want to invent anything. So here the metropolitan area, as of August 2023, these are the unemployment rates. And for United States, the unemployment rate is 3.9%. So I'm looking for places that have unemployment rate that is lower than 3.9%. And the city size, by the way, I'm looking at anything above probably 100 to 150,000 residents. The more the better. I'm not a big fan of huge mega cities like New York, but anything less than say 150,000 residents, it's probably going to be challenging to find some of the trades, some of the people who you need on the ground. They may be a little bit longer to find the tenants, so I find that super small cities don't quite excite me. So adding to the population, I'm adding unemployment, and I'm looking only at places that have unemployment lower than that of a national average. So national average being 3.9, I immediately kind of removed how many more? Remove 16 cities out of the circulation. So that gives me, with this list, which is already a shorter list of 22 metropolitan areas, not properties. And you can see that I've sorted by size, so I have removed anything small, so really anything above 150 is there. Then I want to look at price per square foot in those cities, just for the general reference. So price per square foot is available from, again, San Luis Fed, a government official reporting. So you get the economic research and then median listing price per square foot in those cities. Again, I don't want to necessarily go 1 bedroom, 3 bedroom, like I wish I could, but price per square foot gives you a decent indication of what those prices are. So add it here, price per square foot. So I'm looking for kind of 3 bedroom, 1.5 to 2 bathroom houses. I'm not looking for anything large. So 1,300 square feet would cost me roughly this amount of money in different places. Sometimes in Miami that'll be $500,000. In Irvine City, California, that's almost $1 million. But give or take, it's between 200 and say 350 to $400,000. Way more affordable than Ontario, Canada, where I live. In our neighborhood, I don't know, hard to find anything less than $1,000. I mean, $1 million. I think it's $1,200 Canadian per square foot. This is what we're looking at up here in Toronto, and those prices keep growing. Downtown condos, they're probably up to $2,000 per square foot, give or take. So don't take my word for it, do your own research, again, not a financial planner. So then I want to look at rentals. So I'm looking for 3 bedroom, 1.5 bath. The rental, I found that challenging. So if you can help me identify reliable information on rentals in this type of format, so I don't have to go city by city like Zillow or Trulia, but I can actually extract this data in the data format. The best I could find was Rentable. So Rentable, you kind of look at average rent by city, by 1 bedroom, 2 bedrooms, 3 bedrooms, and I'm guessing 3 bedrooms will likely not be apartments. Those probably going to be houses. So I'm using a 3 bedroom as an indication. I'm hoping this data is accurate. I have no idea what the date they pulled it from. I don't know if this website is super useful. So that's my biggest gap. I could not locate really useful, good rental property data from like a government agency or something. But easy enough, we can just plug it in and then look at rent to price ratio. I'm looking obviously for that 1% golden rule. It doesn't have to be 1%, but the more the merrier. So if we filter by this, I can identify out of the 22, I can identify the 4 most appealing markets where the ratio seems to make sense. The prices are somewhat affordable. The population is growing, and you can see that Frisco has actually had an influx of 8%, so that's a huge growth. The price is not prohibitive, and the rental ratios are good. I'm talking about, again, rental, more or less long-term kind of ratio approach, when you can buy, renovate, rent, and then repeat, right? That's kind of my bread and butter. That's what I love. I've been doing this for definitely more than a decade, probably 15-ish years. Works wonderfully long term. There's no capital gains, there's nothing to sell, there's nothing to churn. It's a slow growing, hopefully income producing investment that I am after. And then in addition to this, I just figured I'll take a look at the median income per capita per person, because if the income is too small, like here, for example, Gilbert Town, Arizona, the income is so small, it kind of makes me suspicious. Is this town really a good area? Are they making decent money in there? Or maybe that's just kind of some agricultural freak of nature. Now, if this is $60,000, then kind of makes me feel a little bit better. People are making more money in that place, so they could probably buy more expensive properties, and they can probably afford a little more expensive rent. Now, all would have been wonderful, and I'd be here saying, hey, Sioux City or Frisco or Charlotte City or Orlando, Florida. Who doesn't like Disney? I would be sitting here going, let's go. And for me, from Toronto, Ontario, Canada, it's easiest to just take a flight to Orlando. It's not expensive. A lot of Canadians go to Florida. There are Canadian banks in Florida, which would probably give me a mortgage. Easy peasy, right? But then I thought, well, let me go verify. So I went into, let's say, Charlotte, North Carolina. Just went on Zillow. Let me double check. Do I actually see some deals? And I kind of went for sale. This is my price range: 3-bedroom, 1.5 baths. It needs to be a house. I don't like anything else. I want it to be newer than 1980. I want it to be between 1,000 and 1,500 square feet, and just kind of basically it. Lots of houses for sale, as you can imagine. This seems to be a nice cluster, so I thought, okay, why don't I look at this neighborhood? So looking at this neighborhood, just completely randomly, I see houses at roughly, let's go in a smaller range, right? 295, 270, 285. So you can get something for about 290. Let's look at my table. Charlotte City, yeah, 280. Okay, spot on, wonderful. Let's look at rents. So I'm looking at about $2,300 for a 3-bedroom apartment, and then, or house, sorry. So I go to Charlotte. This is the cluster. Again, I kind of recognize it. Go in here, and whoops, I am seeing 1,600. I'm seeing 1,700, 1.8. Like, I'm not seeing the 2,300, guys. I'm not saying, like, here's one, but this is probably a large property. Not so much. Okay. 2.5 baths though. They're looking for 2,150. So still a far cry from 2,300. So I am calling bullshit on this particular rent data. It's nowhere near what we are expecting. If I plug in 1,700 in here, then this ratio becomes 0.6. And if I were to do this with all of these cities, I'm sure there will be some issues and implications. And the numbers will probably not be what they pretend to be. Let's just, I can kind of do it in front of you even. Let's go Orlando. Orlando, Florida. Sorry, my font just got wacky there. Orlando, Florida. Same idea. It's just kind of all over the place, but let's look at maybe this cluster. 270, 315, 340, 330. So let's say 330. Let's look at my prices. 310. Okay, so it's a little bit higher, but maybe you can negotiate. Maybe you can get it down. I mean, maybe, right? But still a little bit higher on the pricing side. What about rentals? If we look at Orlando and kind of look at the same location, I'm not even seeing anything for rent, to be honest. But here's 2,200, even 1,800. I don't know what that is, but still, right? So that's an indication that it's unlikely to be 2,300 and up, as this website is suggesting. So either I'm looking at something wrong, or the rentals don't really give us such a wonderful return as they promise to be. So maybe this type of filtering needs to be redone. Maybe it's better to do this manually through Zillow, or somehow pay Zillow or Trulia for the data at their back end. Maybe there is a way to do this somehow through an agent to pull this data nationally for all the metropolitan areas. I somehow doubt it, but maybe there's a data way of approaching it. Please do let me know in the comments. For now, that would be my approach. Just look at the growing population, low unemployment, affordable place, check out the rentals, do the ratio, and I think you're nearly guaranteed to find a good location. And then it becomes, do I have the team in place? Which I don't, but I can go in the bigger pockets. I can go in any other forum. I'll look up fellow investors and say, hey, do you know a good realtor? A good realtor probably would know a good property manager. Both of those will likely know the construction crew, the inspector. They might recommend you a banker. Whatever you need is very buildable. It just takes a little bit of effort, connection, and then once you have everything in place and you talk to these people and you actually verify that this particular city is worth exploring, then you would go and make a trip there once, maybe, if you feel like it. Otherwise, you can do everything virtually and pick up a couple of properties. Why not? The rates suck, and the cash flow will probably not be there at this point in our lives. But if you put a big enough down payment and you are willing to stretch it a little bit and not look for positive cash flow on day one or even year one, and if you happen to negotiate a good price from the house, then this could be a wonderful long-term investment. As rates go down, as inflation subsides, interest rates will hopefully go down. As the monetary debasement continues and the government continues printing their trillions of dollars, they need to refinance their debt. They have, $2 trillion deficit on top of it. Their deficits are only going to grow because the interest on the existing debt is going to be bigger and bigger and bigger. As the debasement continues, real assets like houses will probably be a good investment. I'm not saying it's an absolute wonder, but if you're doing it properly, it should pay off over the longer term. Lots of people are an example of that, and I just want to be prepared. So let me know what you think. Can you find reliable rentals, as in rental data? And do you have any other suggestions of which city I might need to explore in more detail? Maybe I did not capture it here. Maybe you know some phenomenal location that is growing and has low unemployment and the housing is still affordable and the rentals are booming. I would love to explore it with you. Heck, we can partner up. So do let me know. In the meanwhile, thank you so much for watching, and I'll be with you shortly. There's been 2 weeks of no posts. I am now traveling to Portugal with my family, so I might not do another video for a while, or I might do one from Porto and Lisbon. We'll see. That's the lifestyle that good jobs, good investments can afford you. So do spend a bit of time so that later in life, once it all pays off, you can afford taking your family and pulling kids out of schools and going for a nice trip together that will be explorational, that'll be nice, and will indulge, and it is something to look forward to. Anyways, thanks for listening, and I'll talk to you next time.